Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsaita, 0.5% lower on the Nifty. It's been a bit of a subdued kind of a day, if I can call it that. Every attempt at recovery has been sold into. We've not been able to even edge into the green for even a wee bit, just maybe a couple of times. But outside of that, it's been an extremely tough day where the markets are concerned. The Nifty 50, of course, down 0.5%, and within that basket, you've got Adani Enterprises up 2%, one of the gainers. Within the banks, Axis is up 1%, and Eternal, outside of that basket, within consumption, Eternal and Trent are also up nearly 1% each. And that's how difficult it has been. The breadth also is currently in the red where the Nifty 50 is concerned, just about 20 advances for 30 declines. But essentially, it's a fairly range-bound kind of move across the Nifty 50 counters. Infi, Aisha Motors are the top losers, 3% lower on Infi. Aisha Motors down 2.5%. But thereafter, Tata Motors, PV, JSW Steel are some of the other casualties of the day, down around 2% odd. No big movers on either side. At least that is the one possible positive coming out of markets today on the Nifty 50 at least. Let's talk about some sectors. 1% higher on the Nifty India Defence Index. That's the one really standing out. Nifty Auto is down nearly 1% thereabouts. The Nifty Bank providing no support, 1/3% lower. IT down 1.8%. After what's been a fairly strong week, IT is in withdrawal mode. We're down around 2%. The biggest losers within that IT pack, Infi down 3.5%, Infosys down 2.5%, Coforge down 2%, Tech Mahindra down nearly 2%. So that's broadly some of the names within the IT pack which are facing some heat. Mind you, Infosys buyback begins today. So that's the other piece that you want to keep on your radar. Pharma, PSU banks are the other ones which are doing okay on a day like this. Pharma up around 0.25% thereabouts has been one of the leaders this week in terms of sectors. PSU banks up 0.5% thereabouts. That's the other one that's standing out in trade today. And within the PSU banking counters, the ones which are standing out, Canara Bank, Bank of Maharashtra and Bank of India. All of those are gaining 1% plus in trade. So you've got some names obviously to look at. Within broader markets, again, the Nifty small cap absolutely flat. The mid cap also slight bit of outperformance. That's been the case pretty much all through the day. But some real movers. 0.25% higher on the Nifty small cap and has been in the green all through the day. The Nifty mid cap has slipped, but definitely some bit of outperformance is visible on your screen. KRBL, Muthoot Finance, Ather are just some of the big gainers in trade today. KRBL is up 12%. Muthoot Finance is up 9.5%. Ather Industries is the other one, is up nearly 8.5%. And this is the second straight day where Ather is gaining, mind you. The 32% margin when the guidance or the target or the aspiration is just 29 to 30%. So you're seeing that kind of move on an Ather Industries visibly today. And Ipca Lab is the other one. A Bharat Dynamics up 6.5%. A Bajaj Holding also up 5%. Star Health is up 4.5%. So some very big movers, at least within broader markets, visible. Sonata Software is the big casualty. The top loser on the Nifty 500 index, 4.5% lower for Sonata Software. Their annual guidance and their Q2 not really matching up, and therefore you're seeing that kind of pressure. Polymedi, 3.3% lower. Supreme Industries is the other one which is not doing as well, and Infosys among the top 5 losers on the Nifty 500. So that's something that really stands out as well. JM Financial seeing a bit of a pullback after the kind of move it saw yesterday. So you want to keep that one on your radar as well. Kunal, what are you spotting? Firstly, welcome. Good afternoon. What are you spotting?
Yeah, good afternoon. So it's a listless day for the markets as such, frankly, because, 50, 70 points down for the Nifty and almost 150 odd points for the Bank Nifty, indicates that the markets are into maybe a range kind of a mode. But it's interesting to see because, with the event out of the way, with the, election results out from the state side, we could now be expecting that the markets would get back in alignment with, what happens across the globe. We hit, the level of 25,700 thereabouts on the spot levels on an intraday basis. So that indicates that we probably would have tested a minor support for the index over the near term. but nothing much to write away in terms of the index composition, the sector strength. We are still looking at a point where the market breadth is not favoring the overall market trend. There have been instances earlier when the Nifty has been down 50, 100 points, but the net market breadth apparently has been positive. That generally gels up, with the overall market sentiment. But this time around, the trend is a little bit different, where you're seeing the net market breadth still negative. So, just to sum it up, maybe expecting the index to remain to a range for the next couple of days. Depends on how the global market action shapes up.
Okay. And Kunal, on the IT index, your call, would you be cautious at this point?
Not really. I think the adjustment for Infosys, I think, was one of the key triggers which was there. Because if you look at the last couple of days, the futures were at a 10-point discount for Infosys, and that now has come back into premium. So maybe that could be an adjustment which you're seeing, which could play out, which has played out. I now believe that we may probably be coming back towards a point where the trade would start to look a lot more attractive in terms of risk reward for the IT names. So names like Persistent, Coforge, HCL Tech, Infosys, TCS, I think these are some strong names to look at purely from a contra buy perspective.
Okay. All right. So yes, you've got some of those in focus. Let's go across. We have Kanishka standing by on Bharat Dynamics. Okay. So we'll have that up in a couple of minutes. But let's talk, Kunal, about some of the losers of the day. In fact, let's talk about one winner, Eternal. We've seen a bit of a reversal on that counter. We've seen a couple of days where the stock has been subdued. We're seeing that reversal play out today. What's the outlook like?
For 5 consecutive weeks, the stock is correcting from 360 to now 300 levels, where the stock is taking some support. I believe that somewhere down the line, you would probably expect the stock to stabilize, because you can't have a consistent bout of multi-week downtrend for the stock price, because that brings the indicators into very deep oversold territories, and that itself becomes a good risk reward point for contra traders to buy for these stocks after 5 weeks of a straight correction. So I think in that sense, I would actually expect Eternal to start going to a bounce back mode from here on. What matters over here is now if the degree of bounce back, if the bounce back takes the stock to say 310, 320 odd levels, then we can expect that this could be a more of a mean reversion bounce back. But if it takes the stock higher towards 325, 330 plus mark, which means that the longer term trend is still intact for Eternal. So it depends now on the next degree of bounce back for the stock price. But broadly, I would expect 300 as a crucial pivot support for Eternal to and the stock to hang around to these levels over the near term.
Okay. Kunal, your picks for this afternoon?
Yeah, so I'll go with a couple of buy calls. Vodafone Idea is something which I've been highlighting, so maintain that buy, but a fresh target of 11.5 at current levels. The stock is closer to 10.8 thereabouts on the spot level. So I would look out for 11.5 as a target, or the next target for Vodafone Idea. Stop loss could be kept at 10.5. And the second would be a buy in Axis Bank. Now, this could be a surprise in the private sector banking names, because the stock is showing a lot of strength over here at 1230, 1235 plus mark. So would look out for Axis Bank. Higher targets closer to 1280, and stop loss could be kept at 1220.
Okay. All right. So those are our picks for this afternoon taken out. Let's slip into a very short break. On the other side, interesting conversation. We'll have Varun Saboo, head equities at Anand Rathi Shares and Stockbrokers, talk to us about that Anand Rathi conference, or from the Anand Rathi conference, about the themes that are playing out over there and what's standing out for him. Stay with us. That's going to be an interesting conversation. Welcome back, and thanks for staying with us. We have with us Varun Saboo, head equities at Anand Rathi Shares and Stockbrokers. And this is, of course, at the backdrop of your conference, Varun. Hi, very good afternoon. I'm Harsh here. Varun, let me start off. What are the big themes you all have focused on in this conference? And if I can follow up with another question to ask that, what has really stood out for you? So one is the big themes that you all have chosen, and what are the themes that are standing out, which were a surprise, maybe 2 each?
Hi Harsh, thank you so much ET Now team for inviting us on your show. So this is our All India conference. We host upwards of 225 companies here. We had 8 very interactive main track sessions also. The idea was of showcasing what Bharat is like, Our theme for this event was Unstoppable Bharat, and truly it is. It's remarkable how things are shaping up to be. If we have to certainly pinpoint and pick up a couple of sectors which are doing very well, it's very difficult. Because believe me, everything in the country is doing very well. Across companies which have come, the commentary has been super positive. Right from the larger caps like auto companies, we had some biggies like Bajaj Auto, Maruti, etc. We had a lot of mid-cap names like Gabriel, SJS, etc. Across to banks where we had PSU banks, we had private banks, the large cap ones, all of them being there. And one thing which is coming out, everyone is seeing so much traction on the ground. And obviously it has to do a lot with the way government has taken certain steps. We have seen the GST change, which is clearly reflecting across on how demand is shaping up to be. We saw that tax change about the 12 lakh rupee thing which had happened, which came at the right time, and now with this GST change, both together, the demand is just ballooning and it's going to a different scale in the country. It's a matter of time when you will start seeing small caps, mid caps, etc. also flying the way our index has been holding on to. Obviously, we have underperformed across versus the global indices. But I think it's time where India will start scaling up materially of what I can hear from the corporates and how the earnings growth trajectory it looks to me for the next 2 to 3 years. I don't see any reason why Indian equities shouldn't do well. Extremely positive after what we are seeing at our conference.
No, so Varun, point taken, but I'll still push you, I'll egg you on to give us stories which are standing out for you, something which is something different which is happening and which is getting ignored in all of the noise that we talk about on a daily basis.
So one of them is the auto story, where people were considering it to be that this 12 lakh rupee, where this GST change is a one-time benefit, and the festive saw a sharp jump in terms of how volumes have been and things would start subsiding. I think it's a completely different narrative of what we are hearing. All of the OEMs are talking upwards of a single-digit, high single-digit kind of volume growth, which we're going to see going forward. I think autos and auto anchs as a theme have just begun. It's not that we are at the fag end of the rally. They're just about starting. So very bullish, very positive on this theme, auto particularly. Apart from that, there had been a lot of concerns around how financials would shape up. I think across regional banks that we are hearing, across PSU banks that we are hearing, all are talking very highly about their ROAs being significantly strong, about their growth being very strong. So both of these themes, particularly autos and PSU banks, look very, very promising. If you have to additionally consider, I think private banks among the larger cap ones also should do well. So net, the two big sectors, both auto and banking, should do exceptionally well going forward.
Let me talk a little bit about auto. Where within auto do you expect to see an outperformance? Do you expect rural versus urban, two-wheeler, PV versus CV? Where will that extra additional flip come from, in your opinion, within all of these baskets?
So that's a very interesting question. Honestly, we are very bullish on the OEMs in terms of the PVs and two-wheelers. From a domestic per se, they're doing exceptionally well. They're talking about domestic demand per se for four-wheelers and two-wheelers to be very, very strong, high single-digit types, volume growth, which we're talking about. Apart from that, one of the names, if I have to specify one, it is Bajaj Auto, which looks very promising to us. The reason being that they're talking very highly about the exports also. The interesting thing was that they're seeing export demand also to be equally strong or even better. So it's not only about the domestic part, but from a two-wheeler perspective, the export side is also picking up. So if I have to pick one segment among the entire auto pack, it will be two-wheelers.
Okay, and yeah, that makes sense. And within lenders, that's the other place that you're really liking. So within lenders, you like PSU banks over private banks, I suppose. And is this because valuations are cheaper, or is that because that the growth runway is seemingly better for PSUs given the better asset quality? Trying to get a sense.
So sorry, I'll clarify again. I am very positive on the overall financial space, both private and PSU banks. But among the two, if I have to choose, rightly so, as you mentioned, I'll choose PSU banks, considering that valuations are much, much more comfortable there. You're seeing asset quality to remain extremely healthy for them, and that's what has been the concern in the past for them. ROAs of upwards of 1%, it's unheard of, which is where every company is talking about. So very strong growth, ROAs being strong, which is where we are very bullish on. We will be particularly very positive on the regional banks further to it, if I have to further detail into it. So names like, say, City Union Bank, South Indian Bank, etc., are looking very, very good to us.
And Varun, what about the decadal themes? You know, we're talking about defense, we're talking about energy transition, we're talking about aerospace as another sector, which could be a decadal theme, right? How do you view that? I'm not sure if you've had conversations around companies in this space or in the ancillary kind of space within this within the larger basket of these. What are they talking about, and how are valuations looking? Because we've seen a run-up also over the last couple of years in some of these names.
Oh, certainly. I mean, if we have to call it a decadal theme, I think that will be too short a period. These seem to be very large opportunities. We had, in fact, 3 main track sessions, one focusing on defense, the other one on aerospace, and the third on energy, as you mentioned. And all 3 were sounding extremely positive with at least a 10-year plus perspective. I think all companies in this space are poised for significantly strong growth. I don't see a reason why valuation should bother anyone right now. And valuations being rich in this space is for a reason. If you see the kind of revenue growth trajectory that these aerospace companies are seeing, it's nothing because the base is so small. You're going to be seeing significant growth in terms of how these companies are going to report going forward. So we are very positive on aerospace overall and defense as well. Even if I have to hear from other companies, other sectors, say like a cement, etc., all of these have been mentioning that a lot of allocations have been moving towards a defense, right? So defense, particularly as a theme, should remain a very strong one, even for the next 5-year plus at least. And when we talk about aerospace and energy, definitely it's more than a decadal theme, definitely.
And Varun, you know, in every market, no matter how much of consolidation we've seen, there's always somewhere there's a bit of over exuberance. I'm not sure if you've covered some of those sectors or spaces in your conference, but give us a sense whether you have a view where you believe that there has been some bit of over exuberance, and maybe those sectors or pockets will be range bound or will consolidate for a little more time, because we've seen a longish consolidation already. So where will the pain continue to remain is what I'm trying to get to.
See, September last year, we had seen this entire exuberance being there across all spaces, be it large, mid, small cap. And for the last 1 year and 2-3 months, we have been seeing a lot of pressure that we've seen across indices, be it mid caps, small caps, and to an extent large caps as well. We haven't caught up to how the global side has been. And that's where this exuberance has cooled down a bit. But yes, if a couple of sectors where you want to know where we think that there'll be some consolidation still going forward, I think consumers being one, FMCG particularly. The reason being that these are highly penetrated categories, right? So it's not that any GST cut helps in increasing consumption here because it's already penetrated. But yeah, allocation shifts from, say, if I'm having my real income going up, I will spend in an area where I can still buy a car, I can still buy something else, right? So that's where I think consumers will remain a little subdued. Despite that, in consumers, we have one of the companies which I think is very promising, which one should have a look at, is Godrej Consumer, because they are capturing a different segment altogether. They are creating categories of tomorrow. They are innovating new brands where there's a lot of under penetration. So figure out in the consumer space where there is under penetration in their brands, and that company will do well. I have spotted one which is Godrej Consumer. The second space which I think still would struggle for some time more, although I'm not very negative considering how the space has consolidated, but I think it's not going to move up in a hurry, which is cement. I don't see a lot of things happening on that front as well. Demand is a little subdued there. It might remain so for the next couple of quarters. But yeah, eventually private capex also has to pick up somewhere. And that's why I think cement companies post, say, the next 2-3 quarters should start looking interesting. But yeah, for the time being, I would think consumers and cement would remain a little subdued.
Okay. Thanks so much, Varun, for coming in and speaking with us. We'll let you go on that note. And we're hoping that this conference has been super fruitful for you. And some of the insights that our viewers also got, hopefully, added value.
Thank you.
So thanks so much for coming in and speaking with us. But with that, what we'll do is we'll slip into a very short break. On the other side, we'll continue conversation. We'll try to go stock specific. Plenty to talk about, plenty of big movers. Stay with us. Welcome back and thanks for staying with us here on Closing Trades. Let's talk about one of the bigger buzzers of the day today, Bharat Dynamics. And it's not just Bharat Dynamics that has run up. Along with it, the entire defense pack is buzzing. So important to bring this into context. Let's bring in Kanishka here. They've not just declared a very strong set of numbers, Kanishka. They've also won an order. What are brokerage houses saying, and what are the details with regard to the numbers that you can give us?
Absolutely. So like you said, Bharat Dynamics is really in a rally mode today. In fact, it went up more than 7% at one point. And this, of course, is on the back of a very strong set of numbers for the second quarter and a new order win from the Defense Ministry. First up, let's put the spotlight on the numbers that we have. Revenue, that has more than doubled. EBITDA has risen about 90% on a year-on-year basis. Net profit, that, however, that was also gone up about more than 70% on a year-on-year basis. The margins, they, however, have been a little bit softer at that 16.4% level. Now, brokerages, they are very positive on the stock. Nirmal Bang, that has maintained a buy call with a 1774 rupees target price. It has highlighted a very robust order book for the company that is 3x the annual revenue in FY25. It also has very strong projects like BrahMos, Akash and Pralay, which are due in the pipeline. Nuvama, that has also retained a buy call on the company with a target price of 2,020 rupees. Highlighting the 22,800 crore rupees order book that the company has, and also an order pipeline that it is looking at, which is at the 42,800 crore rupees level. So yes, a big order pipeline is what the company is looking at, and hence brokerages are very positive because it reflects a very long-term growth visibility for the company. Other than that, the company has also received a Defense Ministry order. This is a 95 crore rupees order from the Ministry of Defence. This is to supply Invar anti-tank missiles to the Indian Army. So both of these factors, very strong earnings, and this large order from the Ministry of Defence is keeping Bharat Dynamics upbeat. It's trading up about 6% right now, but at one point in the day, it was past the 7% growth level as well.
Bharat Dynamics, and what a comeback with all the defense names. In fact, let's welcome on board Sudeep Bandopadhyay. And Sudeep, hi, afternoon. Firstly, this brings me to days like yesterday when you had Cochin Shipyard come out with negative numbers, or rather weak numbers as per market anticipation. And you got that one-day opportunity of weakness across defense names. Do you think it's a given, while it's a structural play, that any dips should be bought into defense names, although selectively?
Absolutely correct. Selectively, and only if you are in it for long term. See, I don't want to get into the valuation and the challenges as far as valuation is concerned, but the fact remains that defense is a long-term structural story, and if you want to participate in that story, get into it, take the opportunity of any dip, but plan to remain invested for long term. And here the long term means 3 to 5 years. Look, like Bharat Dynamics, they've won an order, but the order delivery will not happen next quarter or the quarter after that. It will take some time, particularly look at the shipyards. Manufacture a submarine or deliver a submarine or a ship takes quite a lot of time. It's more than a year. So one has to be prepared to, stay with the company for a certain amount of time to benefit out of these. Of course, short-term fluctuation movements do happen, and from a trading point of view, you can enter and exit. But if you're an investor, enter, take an opportunity of a dip, and remain invested.
And Sudeep, is there a tilt you have, public sector versus private sector within defense? What is it that you prefer?
Well, at this stage, Harsha, I do like private sector because of the sheer fact that PSU defense companies have run up too much, and the valuations really look stretched. Considering the financials they're delivering, the growth they're delivering, of course the potential is humongous, and it will be achieved over a period of time. But if you have to pick up one stock, probably I'll go and pick up Bharat Forge. I think they have, the earnings call, it was very clear they're focusing on domestic defense orders and contracts, and they're scaling up rapidly the domestic business. I think that's an interesting play at current level. If I have to stretch a bit, then I'll go and buy Larsen as well. It's one of the largest defense companies in India, participating in multiple defense contracts and delivering commendable performance from defense segment as well. We talk about it separately because the other businesses of L&T are too big, but defense itself is also becoming big within L&T. So yeah, I don't want to go to the small private sector companies where again the valuation is a challenge. I would rather play through Bharat Forge or a Larsen to grow the defense story also.
That's quite interesting. In fact, on the subject of L&T, after being quite an underperformer and a lag for quite some time, finally L&T has also begun that move. Kunal, what's the reading on the charts for L&T? And let me throw in a Bharat Forge as well in there.
So yeah, I think L&T is one which has done reasonably well, trading about closer to that 4,000 mark right now on the spot levels, and looks to be quite strong on the charts. But Bharat Forge, I think, is something which is very interesting because after the last 12 months of price performance where the stock was into a downtrend, finally we've seen signs that the stock is emerging out of this bearish trend as such for Bharat Forge. The stock scaling past levels of 1,300 very recently. There is also a formation of a cup and handle pattern for the stock on the weekly charts that should propel the stock further into coming out of this bearish trend and then restarting the strong uptrend. And Bharat Forge historically has been a stock which goes into multi-quarter, multi-years of uptrend whenever the breakout happens for the stock on the weekly, monthly basis. So we just need to wait out for that pattern to play out for Bharat Forge. But as of now, seems to be an emerging breakout candidate over the near to medium term.
Okay, all right. Now we'll shift focus to let me Sudeep, let me ask you one more question with regard to how you see IT shaping up, because we've seen that sector as a whole, and we've taken Kunal's views, but give us your take on the fundamental side. IT at this point, we've seen a correction from the highs. Valuations versus 5-year averages look much more somber, but there are plenty of challenges. How should one play it at this point in this environment?
Aisha, you absolutely summed up right. There are still plenty of challenges. Yes, the valuation looks much more reasonable compared to where it used to be, but the challenges are also real. There are some good noises coming out of US. In terms of H1B, in terms of the growth potential and things like that, but still the order flow hasn't started. There are still uncertainty as far as US economy is concerned, and as we know, a significant part of Indian IT companies' income does come from US, and there are a lot of uncertainties around that. Also, the artificial intelligence is making the scenario much more competitive for Indian IT companies, and there is a pressure on the margins. Unfortunately, our companies don't have their own products, and they have to use third-party products for delivering AI-related solutions, and that is not a very favorable from margin point of view. Under the circumstances, I will be careful about Indian IT companies, even at current valuation. They will probably continue to perform and show low single digit to kind of a growth in the near term. And we'll have to wait for things to settle down and clear signals to emerge before I venture into buying large cap Indian IT companies. Of course, there is potential in some of the mid cap, small cap IT companies which are catering to niche segments like travel and tourism. I've been favoring rate gain technologies for quite some time, and I still do like that. It caters to travel and tourism segment where there is a significant worldwide growth happening. I like Coforge, again, niche player catering to segments which are showing significant growth. So you have to really go and pick up IT companies which are catering to segments where there is significant growth. Other than that, general IT service providers, it's better to stay away.
Yeah, makes sense. So, Deep, that really brings me to AI and the derivatives that you have at play here in India. I mean, what's the best play to actually try and get a piece of the AI pie? Do you think it's going to be via data centers? Is it really via the power ancillaries? What kind of exposure can you take?
Aisha, actually, if you ask me honestly, there is not really any good proxy for AI play as far as Indian markets are concerned. A lot of companies are talking about data center is by and large a real estate game, and we see the real estate players getting into data center, and I think the valuation already has reached level where I don't think there is much joy there. I would rather go into the power sector. Uh, One of the reason is AI, but that's a very small reason. Overall, we believe that Indian power sector is going through a structural change, and this positive, development is going to continue for the next 5 to 10 years. Every segment of the power sector is going to benefit. Uh, you know, Forget what is going to happen tomorrow morning or next month, but if you take a 3 to 5 year view on power sector, I think every company, every well-performing company will benefit. So you take the power generating companies like an NTPC. I think it's an excellent buy from a long-term perspective. You take the power financials. I think the kind of capacity which is being set up by the power companies requires significant amount of financing, and commercial banks will not be in a position to cater to that requirement. So the power financials, whether it's REC, PFC, and IREDA, I think they will benefit significantly from incremental business volume. So these can be looked at. Power ancillary, of course, is doing well and will continue to do well in the near future as well.
Right. Okay. That's, of course, what's happening in terms of the AI plays here in India. But today, of course, you can't get your eyes off from Muthoot Finance. It's a solid 10% bump up on the stock for Jubilant Food Works as well. The same-store sales growth has impressed the street. That stock holding up well. Bharat Dynamics, of course, like we were just looking at, not just the earnings, but that sizable order as well that they've recently won from the Ministry of Defence. NBCC has made a comeback, even though the numbers were not all that great. The numbers were a little disappointing. 4.5% of a jump up. And then look at Idea. It's already on its way to, cruise past the double-digit mark. It's looking upwards and trying to notch up to that 11 rupee per share level. On that note, in fact, we're going to take a break. But when we come back, we'll continue our discussion with Sudeep Bandyopadhyay as well as Kunal Pothra.
Let's go across. Let's try and analyze what's happening on the election front, because that's the other big story. It seems a big win for Nitish as JDU leads with almost 80 seats. Would this mean another game changer in the battle for Bihar? Anurag Shah gets us the latest with regard to the counting.
All right, so it is almost a double century by NDA if I talk about BJP as well as its allies, and you can see on your screen 204 is the score out of 243 seats, and that is for NDA. While on the other side, Mahagathbandhan is just leading with 32 seats. These are still trends. There is no final seat or final declaration of seat which has happened by the Election Commission yet. But out of 243 seats, already a double century. Now let's also take a look. What is the voting percentage? BJP has got around 21% votes so far, and followed by JDU, which has secured more than 19%. If I also add LJP, it will become around 45%, and that's a massive lead. If you compare with the other side, the other Rashtriya Janata Dal has got 22.7% vote, and that's a huge margin victory if you talk about NDA constituents. Now, what has resonated with the voters? Of course, there was a poll promise by BJP of 1 crore jobs, skill manufacturing, as well as 1 lakh crore for the agri itself, and that has actually resonated with the voters so far, and that is what the early trends is indicating. But if you talk about the major seats, what has been the setbacks? You can see that Tejasvi Prasad Yadav as well as the other brother Tej Pratap Yadav both are trailing from their respective constituencies. So on one hand, NDA is all the way. It's almost like a clean sweep, if you can call, in Bihar by NDA this time. But on the other side, a major setback for Mahagathbandhan.
Thank you so much for that take. Of course, it's a big win for the NDA, markets to a certain extent seem to have priced it in, right, Kunal? To a large extent, this victory.
In fact, I think on most of the state elections earlier, Delhi, I think Maharashtra as well,
Haryana.
markets had
Haryana was a
very
surprise,
similar.
right?
Yeah, but markets had reacted very similar. So I think on that event day, on the result day, I think the markets were a lot more subdued.
Yeah. And it's, I think, a show of resilience because I'm just looking at the global screen, Kunal, because across Europe, you are seeing red ticks. The handover from US, of course, was weak. And I'm just going to bring up what the pre-market rates for the US equities are, because once again, you're down almost 100 points in the NASDAQ futures already. And, it's a little bit of a negative bias even for the Dow and the S&P futures. So amidst that weakness, we've managed to stay put. So that's a good sign, right?
Yeah, that's a very good sign that we are outperforming at least the global market. But then, what happens, Aisha, eventually is that if the pain in the global markets accelerate, then eventually our markets will also buckle under some sort of a pressure.
Right. So just looking at the screen right now, there's of course Adani Enterprises which is holding out, SBI which is looking good, Bajaj Finance, Dr. Reddy's, Geo Finance, Trent after getting extremely beaten down, it's finally circling around those 43.80 odd levels on the futures. Axis, Adani Ports, Asian Paints are some of the other names which are also going out. But the true story today is in some of the earnings reactions, be it a Muthoot or be it a Jubilant Food Works. But Sudeep, I guess the question is how much more for both gold as well as gold financiers?
Well, I think the potential for growth is significant. Let me be very clear here. Yes, there was a bump up as far as their business is concerned because gold prices went through the roof. Things have started stabilizing, but I think the scope for gold loan business is huge. The acceptability of borrowing against your gold has also significantly increased, and that gives further opportunity for the gold loan companies. There has been a generally aversion from a lender's point of view to give unsecured loans because this entire unsecured loan came under a lot of pressure, whether it's a microfinance, whether it's otherwise MSME unsecured loan. And we see that as far as all the relevant lenders, including banks who had significant unsecured exposure. So under the circumstances, lenders are also preferring to lend against securities. And the two securities which they look for is either property or gold. So one segment is a typical loan against property. The other segment is gold loan. Now, gold loan is much more liquid security from a lender's point of view. I think they would prefer any day. So that's the reason we see significant expansion in gold loan book for multiple banks who are in southern part of India. And of course, the typical gold loan companies like a Muthoot, Manappuram, including India Infoline, they also have been expanding the book rapidly. Muthoot numbers were pretty good, much better than expected. But I strongly believe that they still can perform even better going forward. And a little bit of coming down or softening of gold prices will not affect their growth in any manner.
Okay. Of course, that's with regard to Muthoot. Now, we spoke with the management of Muthoot, in fact, and stock surging. George Alexander Muthoot, the managing director, shared the outlook in case of price fluctuations, especially in case of gold, and the margin and impact, if at all. Listening to a slice of that conversation.
Yeah, today, if you look at the gold price, if you look at today's gold price, if it is 100 rupees, the average loan to value on the gold outstanding today is less than 60% only. That means people who had taken money earlier, although the gold price has gone up, they have not borrowed it fully. So there are still headroom for that. And people borrow the money only if they want it and if they are able to repay. So just because the price has gone up, people doesn't just borrow the money, because finally they have to take back the gold by paying the principal and interest. So they wouldn't want to lose the gold. They borrow what they require. So today our average LTV or the LTV on the book is less than 60% only. In the last 2-3 months, 2-3 quarters, the bank, our borrowing rate, our cost of borrowing had been stable. But now in the last 1 month, etc., it has gradually started coming down because the banks have reduced their interest on Muthoot. So their 1 year lending rate to us has actually is coming down. So probably in the next 2 quarters, we should see the cost of borrowing coming down by about 20 to 30 bips. That's it. Maximum 20 to 30 bips.
Okay, so of course that's with regard to Muthoot. Sudeep, I wonder if there is a sector pocket space which you believe is really standing out. We're at the fag end of earnings. Anything that you feel has really stood out for you against your expectations, and you believe could be an interesting buy at this point?
Harsh, one segment which definitely beat all my expectations and calculation is the paint segment. I think that the fantastic set of numbers which Asian Paints came up with was definitely not expected by anybody in the market. Even the other paint companies came up with good set of numbers. So whether the competition intensity has come down, whether the leader is back again, these are questions which needs to be answered going forward in Q3 and Q4. But the kind of set of numbers which they came up with was definitely beyond everybody's expectations. Well, whether we will recommend a buy in some of these stocks, I don't think so. I personally, at least my belief is that competition is still, there. And with JSW acquiring, a large business of Dulux Paints and things like that, and Birla Opus hovering, there's a bit of a little leadership change in Birla Opus and a little bit of wobble there. But I think the competition is real. So I will wait and watch the segment, not recommend a buy straight away. But the results definitely were beyond everybody's expectation.
All right. Sudeep, thanks so much for joining us this afternoon, getting us all of those views. We'll let you go on that note. And what we'll also do, viewers, is to a very short break. On the other side, we'll continue to talk stocks. So stay with us. Plenty to speak about.
To claw back into the green, that spike up is duly all thanks to banks. SBI, of course, is the one which is leading the pack today with a solid 1.25% move. You've also got an Axis which is holding out well, very, very smartly. And HDFC Bank as well has now finally turned the round, or rather turned the tide. It's managing to pick up a little bit in trade, and it's now holding out in the green, at least, or move to the green side. So that's what I'm seeing in terms of the large caps. But amidst the mid caps, Kunal, what's the trend that you're seeing on banks? Or do you think it's largely the blue chips which are leading the pack right now?
Yeah, it was actually at 3 o'clock, strike of 3 o'clock, where we've seen the markets doing that spike. And started off with banks, and specifically, I think we saw the move coming back into SBI, where the stock made a high and then trickled to the other large cap names. The last I saw, you saw a spike coming back into names like L&T, Hindustan Unilever, Bajaj Finance, Finserv, etc. So it's spread across, widespread across large cap names. I'm sensing this could be some sort of basket buying which could be happening, at least from a technicality point of view. But yeah, I think this brings the markets back again to the fray of trying to come back and conquer that 26,000 mark.
Okay. Yes. So you've got the Nifty spiking now. We're up around a 0.1% thereabouts. I wonder what's happening in broader markets, and within that basket as well, you're seeing decentish upticks. Okay, so nothing much on the mid cap, frankly, but the small cap also continues to hold in fine fettle. So no big moves on either the mid cap or the small cap, at least nowhere close to the move in the large cap. But the Nifty PSU Bank is up 1%. So that one has made a very, very smart move. And the Nifty India Defense Index is up 1.25%. So you're seeing a few percentage points being gained on both of those. A few bips rather being gained on both of those, and that is visible. The Nifty FMCG index also seeing a spike. If you can pull that one up, 0.5% higher now on the Nifty FMCG index. Radico Khaitan and Marico are the two ones which are gaining over 2% each in trade. Okay, but Nitin Raheja, Executive Director, Head Discretionary Equities at Julius Baer, joining us at this hour. Great speaking with you, Nitin. Let me first start off by having your take. We're very close to life highs where the Nifty is concerned. Earnings are now pretty much through. Give us a sense on what H2 holds in terms of positive surprise, because that is what will determine the direction from here on. What's your sense?
we started this earnings seasons in a very muted manner. Most analysts' expectations were that this would not be a great earnings season. But the markets actually, with the collective wisdom, actually started this earnings seasons towards the higher end of their trading band and, more closer to all-time highs, if you remember. And it's sort of been validated and borne out because if you see the earnings season, this has been, I would say, a pleasant surprise. The earnings have been better than what analysts expected. And now, as we sort of head into the third quarter and the fourth quarter, the impact of those GST cuts that were seen and what anecdotally people talked about, festival-led demand, should all manifest itself in the third quarter. So I think I'm pretty positive on the markets, although it might yet take some time to sort of make a significant break. We might break and test our 52-week highs, but to significantly break out, we yet need earnings momentum to start showing up. Having said that, I believe that if you go by the expectations for next year, the consensus view is that we should see at least a 14-15% earnings growth. And if that is to play out, I would believe that I won't be surprised if we test or go into new highs within the next 6 months.
Interesting. That's the take coming in on the overall market sentiment right now. Just looking at banks and the way they are holding out, of course, SBI is the one which is leading the chart. Like we pointed out, you've got HDFC Bank turning the tide right now as we speak. You've got Axis Bank, which is holding up also 1% in trade. Let's see how the entire banking piece plays out. That, because of his weightage on the index, is bound to actually resurrect and lift up the overall markets as well. And Kotak also has flattened out from where it started off in trade. But Jubilant Food Works, that's the big star today after its numbers and especially the same-store sales growth that the markets liked. Kanishka is here with highlights from the earnings. Kanishka?
That's right. So Jubilant Food Works, like you said, is in focus. After an inline set of numbers that the company has reported, its standalone revenue and EBITDA, they saw a growth of about 15.8% on a year-on-year basis, whereas the net profit, that jumped about 23%. Margin stayed steady at the 19.4% level. And the company did see continued expansion with its stores. They now are at 3,480 stores. This includes 81 Domino's outlets, which are now spread across 500 cities. India LFL growth, that was at 9.1%, led by delivery LFL of 16.5%, while the orders, they saw a growth of about 24%. International markets also performed well, especially Sri Lanka saw a growth of 86%, Bangladesh a growth of 54% over there. On the con call, the company did guide for a strong H2. It plans to open 900 stores in 3 years, aims for 5 to 7% steady state LFL, and sees 200 basis points of margin improvement over a period of 3 years. But brokerages, they remain split after the result, which has been in line. Jefferies has a target price of 1,000 rupees, Bernstein 820 rupees, Morgan Stanley 775 rupees, whereas Citi, that has maintained a price of 800 rupees with positive views citing expansion-led growth and strong delivery momentum. On the flip side, ICICI Securities, that has cut the target price to 700 rupees, and JP Morgan, that has also lowered the target price to 650 rupees, citing valuation concerns and softening LFL growth. So yes, a mixed view as far as the brokerages are concerned, but overall an inline set of numbers is what we saw for Jubilant Food Works.
Yes, that we did. And Nitin, finally coming out of a slumber, the entire QSR space with some added cheer after the GST rationalization. Is this a piece or a sector that you're looking at?
I think it's pretty interesting because the sector has actually done nothing for the last couple of years. From, the initial euphoric listings and the expectations of growth, the sector has done nothing. So in that sense, if you have to take a little bit of a contrary call, I think the sector has consolidated. The GST cuts have helped. And if consumption were to get spurred, more so with food inflation being so low, that's the other advantage that the pack is working with. I would not be surprised if we do see a sort of a cyclical revival that take place in the sector.
Okay, and Nitin, give us a perspective. How would you play consumption as a theme? As a larger theme, what are the sub buckets in which you'd play consumption?
Well, consumption, I would play it through the premium end of the consumption, which is, in my view, an all-weather story and pretty resilient through cycles. And that would mean, whether we are talking of premium automobiles, premium, garments, we are talking of travel and tourism, these, and lifestyle-oriented products. I think these are all themes which have shown a tremendous amount of resilience through market cycles. Adding on to that, of course, aviation also comes as a part of that. But adding on to that, I think the revival in the bottom K of consumption bucket should also start showing signs of picking, and that would probably encompass a far more wider reach, from footwear to garments, and even, for example, entry level two-wheelers and cars.
Right, absolutely. But Nitin, as a strategy, would you think that it's the premiumization play that you would want to play as opposed to maybe rural or the bottom-up stories?
The premiumization play, like I mentioned, is an all-weather play. It's sort of going to be it's going to hold the consumption bucket together through all, and that's a play which, if you ask me, while you might have small blips in terms of growth, but it's almost a linear play over the next few years. On the other side, the non-premium play, I think, is headed for a cyclical upturn, and at least that's the bet. And normally, and I've talked about this earlier, wherever the government puts its might behind something, like, for example, the government had put its might earlier behind infrastructure, and they upped infrastructure spending, and we saw a boom out there. Now, similar things happened with power. And now the government is putting all its might behind, reviving consumption, with domestic consumption being almost 58-59% of our GDP. I think that should see that cyclical upturn take place. And I think that, to me, is the cherry on top of the premium consumption.
Nitin, anything that stood out for you in terms of earnings this time around? Commentary, earnings, which you were absolutely not anticipating? I've been asking this question to a couple of people, trying to get your perspective.
I think this was so there were two things that stood out. If you look at the broader commentary, was quite positive across most sectors. So whether it was automobiles, we saw that. Whether it was the internet e-commerce consumption basket space, we saw that happen. We saw the banking space come up with numbers which were better than expectations in terms of credit costs or stress in the system. On the other hand, what we also saw was, if you go to the other end of the spectrum, which is the small cap earning, while at an aggregate level, when you look at it from an index perspective, it didn't really show great earnings. But when you look at individual bottom-up stock stories, and that was not related to any particular industry, we saw a lot of positive commentary coming from the small, or I would say even the micro cap space. And that was quite heartening, which basically tells you that the MSME sector is doing reasonably well.
Okay, that's that on the market segment right now. Eternal, let's talk about that, because that stock dipped below that 300 rupee price point. Now it's that struggle to stay put above 300. Kunal, I mean, is this a big directional change or a trend change that you're seeing, or was it just a one-off day? Because I think just a short while back you had a huge block deal also on Eternal.
Yeah, but I think 300 levels, Aisha, it's a good strategy to go for a contra buy on Eternal, because 5 consecutive weeks, the stock has gone through almost like a 20% correction. Somewhere down the line, I believe that the mean reversion could probably stop. I mean, could play out, and the sell-off could stop for the stock at current levels, at 300-ish odd mark. So I believe that it's a good territory, and that's what I think the prices are taking support today are indicative that there is a fresh lease of buying which could probably have started to seep into the stock price, and that generally is a indication that selling gets arrested, the stock price say consolidates for a couple of weeks, and then gradually you may start to see the stock going into an uptrending mode. So price wise, I think it's a good time to try and go for maybe a contra buy or chip into the long positions for someone who has maybe at higher levels.
Okay, that's that on Eternal. 302 is where the stock is today. Nitin, you think that's a better strategy instead of what one consumes, how one consumes is what one should have in one's portfolio, and maybe consumer tech may be a great strategy. Cases in point being, you know, your Nykas, Eternals, etc.
Well, consumer tech is coming of age, okay, and we are seeing market leadership getting established out there. And it's my belief that after the initial euphoria, and after coming into looking at the demands that the market puts on these players, uh, a lot of them are having a clear path to cash flows and profitability. The point in this is that this is generally a sector where the difference between number one and number two is huge as such. And I think that is what presents an opportunity from time to time, even to get the number one. Because sometimes you have a phase where the number two player gets a little more aggressive, wants to do a fundraise, and the number one sort of reacts to it, and we see a price correction. I think because this is a winner takes all market, most likely. So, but I think this is a very interesting space, and the business models that are starting to emerge are giving you much more confidence.
And Nitin, anything within cement that you're liking? It's not a sector that generally talk too much about, but Q2 is generally softer seasonally for cement. Could Q3 lead to a bit of a resurgence, given that we've seen a bit of a prolonged monsoon play out in Q2 and almost, in fact, into the start of Q3 as well?
Yeah, so I think we are positive on cement, and we have we own cement in our portfolios across, and our own belief is that the pricing has held remarkably well in a very tough period. And generally, the second half of the year is when you see a lot of spending happening towards infrastructure, towards construction. So I think cement should do well.
The take coming in on how to approach the cement play right now. But Nitin, what about that entire PSB craze that the market had about a month back? Of course, it was the valuation story which was on their side. But do you think PSBs versus private banks, does one really need to make that kind of a call, or do you think a basket approach may actually work better?
Basket approaches should work better, because it's not a question of, given how PSBs have come back and how the books have held, and the kind of valuations that they trade at, and more importantly, the recent conversation that has been going around. You had this whole PSB meet that happened in terms of the Manthan, as they called it. I think the government is also looking to see how they can create a few large banks, and that's been talked about, and also in that process create value. And normally, whenever the majority shareholder is trying to create value, we as minority shareholders also do it. So I think I am quite positive, and I would follow a basket approach.
All right. Nitin, the other pocket that in fact, I was listening to Hero's commentary today, Hero Moto, and they were suggesting 8 to 10% growth within the two-wheeler industry as a whole, with Hero's growth obviously being faster than the industry. And a very interesting nugget came out. They said that there have been 3 instances in the past where excise duties have been cut, and a 5 to 8% duty cut has been passed on to consumers. For the 2 years thereafter, the industry has grown at double digit. Is this something that the street has underestimated, in your opinion, the two-wheeler industry? Because one, there's a GST rate cut, but along with it, you've seen tax cuts. You've seen plenty of incentives being doled out. So, and inflation at all-time lows. All that auguring well for something like a two-wheeler industry.
No, I think I agree with you. And, let's not forget that even before this rate cut, there was this conversation on the rural economy revival. That is, after a few great years of monsoons, the MSP price hikes that have taken place, the rural economy is expected to do well, and that would benefit the entry-level two-wheeler segment. And now, coupled to that, you also have the GST cuts. So I think there are a number of tailwinds that are backing the sector currently.
How would you play it, Nitin?
We would play it through the entry level two-wheelers with a largely domestic focus.
So 100cc. How would you play auto, Kunal, from a technical perspective?
I think it's a good level to go for a buy on auto stocks, and especially at a point where Maruti, Aisha Motors, the leaders of in the last couple of months, I think these stocks have taken a pause. 5% to 7% broad correction for these auto stocks, and especially the ones which have been the leaders. I think purely in that sense, it's a very good level for contra traders to look at a buy, because eventually I think after say broadly a 10% odd correction from the previous swing highs, the trade looks very attractive for many of these stocks, and these stocks have confirmed breakouts after years of underperformance, consolidation, call what you may want to, for these names. So I think in that sense, I would probably be a lot more bullish on the entire auto pack, and it's a matter of time that once these stocks come back into recovery, you would see these stocks coming back into breakout of their previous lifetime highs or swing highs, as the case would be.
Nitin, the other thing that I wanted to talk about also was the entire capital market theme, right? Structural as it may be, it has had its sort of some accidents, if I can call them that, and there has been bouts of selling as well in that space, and valuation ease off too from time to time. Having said that, I was just looking at BSE's earnings performance for this quarter gone by. Do you think it's a conviction buy still? And again, do you be selective there now?
It's if you ask me, we are very positive on the entire space. However, what concerns me is a little bit from a valuation perspective. So, I would be very, very specific when I'm looking at the entire space. But overall, like you said, it's a structural story. And I would, love to have corrections as an opportunity to buy in and take a little bit of an overweight stance out there. But current valuations, say, for example, if you were to look at, exchanges, or even if you were to look at some of the intermediary space out there. I mean, within that, I yet feel the AMC space is a better bet today from a valuation perspective. But overall, like I said, across all different sectors within the space, we are very positive.
I wanted to quickly call out one piece. Let's pull up Tata Motors CV on charts, and what we'll see on the chart today is stock obviously under a bit of pressure, and that could easily been mistaken to be that that pressure is coming because the markets in general are under pressure. But there's a bit of readjustment which is playing out. Nuvama has come out with a note. They're saying that there's some passive outflow expected from Tata Motors CV today. Around $470 million worth of passive outflow, 4,174 crore on the 14th of November is what they're saying. The selling pressure comes from passive index funds, ETFs, index tracking portfolios that are required to offload the CV shares to realign with the updated index composition. Also, let's listen in to the key takeaways from the conference call from Girish Wagh, who's the MD CEO of Tata Motors CV, of course, and even Tata Motors CV came out with numbers yesterday as well, so needed to cover that as well. So let's try and listen in to that piece.
I think our reported profitability at a console level was impacted by a non-cash charge of mark-to-market, which is purely an accounting, for the investment that we had done in Tata Capital. And this, after listing, the price had been lower than what the initial valuation was. So the mark-to-market adjustment of 2,000 crores is what is caused the loss at a console level. But if you look at the underlying PBT and the net income, both remain strong at 1,500 crores and 1,200 crores respectively. But coming to medium and heavy commercial vehicles, I think it has had a secondary impact wherein, due to the GST rate reduction, as consumption of various items increased, it called for higher freight being transported on the road, which led to improved utilization, and therefore this will now lead to a cascaded impact in terms of higher demand.
Okay, last couple of minutes to go for close. It's been an interesting week of trade. Let's pull up the Nifty, a 50% higher on the Nifty 50 index. We've seen a very, very decent recovery, at least in trade today. Some of the gainers, Eternal Axis Bank, Trent, and now there are plenty. In fact, we started closing trades, which is the show at 2 p.m. with very, very few gainers in terms of very, very few gainers above 1% or making more than 1% in trade today. But now we're seeing the become better. The advance decline ratio has improved substantially, 30 advances to 20 declines. And we're seeing a better set of stocks also sitting in the green. Trend, Geo Finance, SBI, all of them gaining 1.5% in trade. Some of the big boys also participating. Let's pull up a Reliance doing much better than it was pretty much for a predominant part of the day. So a Reliance Industries is also doing fairly well, 0.5% higher on a Reliance Industries. Let's talk about some of the losers. And Infy still continues to languish at the bottom. Mind you, that buyback of Infy being initiated today. So you have the option to opt for that buyback. Aisha Motors, Tata Steel, Tata Motors PV, JSW Steel are some of the Nifty counters which are trading in the red. Some results reactions, and in fact plenty of them. KRBL is the one that really stands out, 13% higher. Man Industries came out with numbers yesterday as well, 11% higher on Man Industries. Muthoot Finance up and away, 10% higher. We spoke about this in the morning, no surprise, but that reaction and the hold up is what is really, really impressive. Just the hold up, the fact that it's held up and in fact closed at the day's high. The strength is visible. You're seeing, among others, Jubilant Food up 7.25%. Don't remember the last time the stock had moved in this fashion. Bharat Dynamics is the other one. PG Electro also doing fairly well despite a difficult set of numbers. Mishra Dhatu is down among the ones which haven't reacted as well. So is at Tilak Nagar and Som Distilleries within the same Alcobev space. You're seeing Sonata Software also under a bit of pressure, 4% lower on a Sonata Soft. Now let me take you through some of the sectors which have stood out. IT down nearly 1%. Nifty India Defense Index is up 1.5%, so that one is really standing out. FMCG is up 0.5% as well. Banks have done okay, and for a day on which most of the large caps have found it difficult to stay up in the green, banks have closed 0.25% higher. So that has led to the kind of move on the index. The PSU Banking Index is up 1.2%. And the pharma index also has done fairly well for itself.
Oh, yes, it has. Kunal, what's it looking like? Because I was just looking at the weekly returns. It's actually auto and it's IT, which has done very, very well. What's that telling you about what the week ahead could be like?
Yeah, I think there was a huge upside for the market, which you've seen on an intraday basis, at least in terms of the recovery, from the intraday lows. And now I think the Nifty coming very close to that 26,000 mark. So this could be very interesting for the Nifty going forward. This puts in the market as one of the best weeks in the last 4 weeks, because in the last 3 weeks prior to this week, the market performance was a lot more muted. So you are going into the next week into a much more positive aspect, as well as a continuation up move. And historically, whenever we've seen, at least in the last 4-5 months, 1 week being extremely positive, it has a cascading effect into the next week, where the index has moved up higher by at least another percentage point or so. So which means next week should be a point where we should come very close towards a breakout of the lifetime highs.
Okay, hopefully, fingers crossed at that. Perhaps next week should be it for the, for us crossing the lifetime highs, the previous ones, that is. We're going to take a very quick break. Tata Motors numbers, but we'll track that when we return.